Advantages and disadvantages of mortgage insurance and how to use it for your benefit. Hey, what's up, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thank you so much for watching today. Before I get started here, if you could do me a huge favor, if you like this video, go ahead and click on that like button down below. And if you really like the videos and you want to see more of them, go ahead and hit subscribe. And then there's a bell next to that. And if you really, really want to know when the videos are coming out, go ahead and hit that bell button, and that'll generate a notification for you for when my videos are released. But I really do appreciate everybody watching these things. This is a great one today. This is about mortgage insurance, and this is something that I've come across several times just recently. And so I thought, why should I, let's do a video about this. Let's show everybody what the hack is on how to use mortgage insurance to your advantage. And it works especially if you have a 20% down payment going forward. And if you want to use just a little bit of it, you can actually use the mortgage insurance to your advantage. So I put together kind of an analysis, just a rough analysis here. And what I want you to take a look at is the main screen, and in particular the first two columns here, the 15% down with mortgage insurance. So I did a case study on this. This is a recent scenario that just happened. You can see that there's a purchase price of $800,000, and in this case, putting 15% down gives us a loan amount of $680,000. Now, what's interesting is that oftentimes with mortgage insurance, the interest rate is actually going to be lower than it is with 20% down. I don't know why that is. It's just some little thing that is a quirk in terms of pricing. And so in this example, we had a 6.875% rate for the 15% down mortgage insurance, whereas you'll see here in just a moment that the fully 20% down was actually higher. So continuing on with this column, the monthly payment with principal, interest, taxes, and insurance is $5,517 a month. And that's with the mortgage insurance added in there. It's not very much mortgage insurance, actually. It's only 0.25, which is roughly $147, I believe, in this particular example. So our cash to close and our down payment that we need for this transaction to work is $120,000. No, this is a conforming loan. These people had really, really great credit. So we didn't really have to have any reserves going forward. So they didn't have to have any money beyond the $120,000. Now, I didn't put any closing costs in this particular chart or examples just to keep the numbers as simple as possible. But you can, see roughly that if they were to have an escrow account with taxes and insurance, you'd probably be looking upwards of $10,000 extra for closing costs to set up that new escrow account with taxes and insurance, and then also regular closing costs as well. Okay, so second column here, what happened if they were going to put 20% down? So again, $800 purchase price, in this case, $640,000 loan amount, because we're going all the way to 20% down. The interest rate actually was 7.125. So you can see that it's a 0.25% higher, even if they put the actual 20% down versus 15% down and using mortgage insurance, which is totally crazy to me. So in this example, that monthly payment ended up being $5,220. And remember, that's principal, interest, taxes, and insurance. And so our total out-of-pocket cash to close in this example, $160,000. So that's a $296 difference in your monthly payment with the extra $40,000 that they put down on this particular example. So that's a decent savings, I would say. But the hack comes in when we were like, okay, well, let's just do the 15% down now, and then we'll do what's called a recast afterwards. If you guys have watched my channel, you know that there's a video about recasting on there, so you can go get more information about that. But the third column gives us an example of what the recast afterwards actually looked like. So what they did is they put 15% down in this example, and then they went in and they put extra money down afterwards to get rid of mortgage insurance, but also keep the same rate that they had when they had 15% down. So afterwards, when we recasted the loan, you can see that the new loan balance again was 640. So just like they were putting 20% down to begin with, but they had to do this extra 5% down after the transaction took place. They did the recast. They called their lender and said, hey, I want to recast this. And they said, sure, no problem. When do you want to make the payment? And they said this day. And so they're going to put that extra, they did put that extra $40,000 down into their new mortgage. So their new balance is $640,000. And then they still get the benefit of the rate that they got when they did the 15% down. So 6.875% was the rate. And you can see that their monthly payment now with the 20% equity in the property, $5,112 a month, which is a $404 savings compared to the original 15% down hack, which is totally awesome in my opinion, right? So they actually saved money by using a very specific strategy here, and that's using the mortgage insurance to their advantage to be able to actually get a lower monthly payment going forward because the interest rate was lower in this particular example on the loan with the mortgage insurance versus the loan without mortgage insurance. Now, how cool is that? Like if you can actually, do this now, obviously there's a lot of moving parts with that. So, you have to have somebody that knows exactly what they're doing. When you get the loan originally, you have to make sure that the bank that you're lending to is actually going to allow you to do a recast going forward. So that's always a big question to ask in the beginning. And you need to make sure that you have that answer, because if it's not, then the recast doesn't work afterwards. But when you get to 20% equity by law, you have to remove the mortgage insurance. The mortgage insurance companies have to do that. So if you did a purchase transaction and the property value came in at 800, like we're talking about here in this particular example, and then when we wanted to remove the mortgage insurance, we can actually use that appraisal that we just did because it's within a couple months of closing. And in order to do the recast, they would use that $800,000 value. So they just took that extra 5% and put it down, and that gives us 20% equity in the property. So they have to, again, by law, remove the mortgage insurance, which I think is a really cool thing. Okay. So this is a sweet example of, definitely something that you can use to your advantage. And again, like I said, there's a lot of moving parts to it, and it's not always for everyone. But if you are willing to really strategize and, trust the process with your loan officer, then this is something that you could probably use going forward as well, whether you're doing a purchase on a primary residence or a second home. And then sometimes on investment properties, I don't think I've ever done this on an investment property, with 15 or 20% versus 20% down on an investment property, because you usually got to have, 5 or 20% down when you're doing an investment property. But this definitely works for primary residences, and it can work mostly with conventional loans. It doesn't really work for jumbo. FHA, you're still going to have mortgage insurance regardless of how much you put down or not. So what I would say is stick with the conventional loan in this particular scenario, and you can use this hack for you. Okay. So if you like this scenario and you think that this is something that you want to do and you need somebody to help you out with it, I'd love to be that person. What I'm going to do down below is put my calendar link, and go ahead and click on that calendar link. And what you could do is schedule an appointment with me. We could chat about it. We could do a loan application, get all your documentation, get you pre-approved and ready to go for something like this. And thanks so much again for watching my videos. And I hope you like this. And if you do, please make sure you put a comment down below, and hopefully I'll get you and I'll see you on the next show. Have a great day, guys. Bye.